Hi, everyone. Welcome to the Goldcast. I'm here today with Andy Schectman. He's the president and owner at Miles Franklin, one of America's leading and most trusted bullion dealers. So, hi, Andy. Thanks for coming on today.
Yeah, absolutely. It's good to be here. Thanks for having me. Appreciate it.
Definitely. So, you've really been one of the people speaking a lot about what's going on with precious metals behind the scenes and stuff. What do you think happened for the last 4.5 months during this whole coronavirus situation with precious metals? Obviously, we saw silver going down a lot, gold kind of going up. What was going on behind the scenes in terms of that stuff?
Well, I mean, on a macro level, from a retail perspective, we have more interest from the mainstream than I've ever seen in 30 years of owning Miles Franklin. The awakening, as I would call it, the rude awakening, maybe even, has opened people's eyes to the fact that traditional forms of investing need to be reevaluated. Excuse me.
Yeah.
Even in the best case of time, in best case examples and in good times, best laid plans need to be reevaluated, and I think that's kind of where we are right now. Normally, when we would see times of uncertainty, when we would see times of volatility, times of chaos, whatever that chaos may be. Certainly nothing like we saw here a few months ago, but market chaos, let's say. The first stop would be, for most investors of any means, would be to go to the bond market. The bond market, which was traditionally considered the bastion of safety. In fact, it used to be that stocks were considered risk on and bonds were considered risk off. The low interest rates, however, have created an environment where bonds really aren't a place to be anymore. Let me explain. When I started in this industry in the 90s, you could buy a U.S. Treasury earning 9%. So you could put $2 million into some treasuries earning 9%, make $180,000 a year, live off the interest, and live like a king. Not touching your principal. Now at 0.6% interest on the 10-year Treasury, that $2 million doesn't even net you $12,000. And when we talk about real interest rates after factored into inflation, you're going backwards on a 10-year investment. And so interest-bearing investments, or the bond market, really is not a place that people want to go to any longer. And so we have found, since the beginning of the year, massive price inflation in this industry, courtesy of demand from the mainstream public that I've never seen ever in 30 years. I guess if I were going to characterize it one way, from a perspective of the retail side, it is of mainstream coming into the fold, no longer just speaking to the choir. We talk about the price. Look, last April, the Bank of International Settlements reclassified gold as the only other tier 1 asset on the planet. If you take a look at what gold has done since April 1st of 2019, you see a 45-degree angle moving up. I believe that will continue. I think silver will have its day. When we go back and look at previous peaks, previous market cycles, gold almost always leads the way. Silver will follow up and typically outperform gold in the second half of the cycle, especially in terms of silver lagging when we are in a recessionary environment. And so, with everyone being locked down and businesses shut and industry really grinding to a halt, the industrial side of silver has perhaps been focused on too much. I do believe that silver will retain its role as a monetary metal. It'll retain that, I think, in spades. As soon as gold breaks through its all-time high, and we're just about 10% away from that. Remember, gold is at all-time highs against almost every major currency on the planet right now, with the exception of the US dollar. And I think once we get through that 1930-ish range into 2000s, silver will go off to the races. And I think it'll be probably the go-to investment for the second half of this year and into the future. I look at it as the most undervalued commodity on the planet and a gift. All of this manipulation and the actions of JP Morgan on the COMEX market is a subsidy and a gift for those of us who still have the ability and desire to accumulate silver at what I consider to be the most undervalued asset on the planet.
A lot of great points there. I guess going back, you said that a lot of the price for gold increasing had to do with retail investors and public demand. To what degree do you think that has an effect on the price versus obviously these futures markets and central banks buying and selling gold? I think a lot of the increase in price was due to individual interest.
I think the retail demand had very little to do with the price rise. I think it had all to do with the reclassification of it as a tier one asset. Since 1944, there's only been one tier one asset in the world, a combination of US dollars and US treasuries. That's what happened when Bretton Woods was enacted after World War II. Since then, gold has been a tier three asset, meaning only 50% of its value was calculated on the balance sheets. Therefore, central banks didn't want to hold it for four reasons. Number one, it was unpredictable in its movement. Number two, it paid no interest. Number three, that tier three status would only enable them to calculate 50% on the balance sheet. And well, let's just say those are the three big reasons anyway. And that denigration on the balance sheet, would inhibit their ability to sell bonds and do international business. So banks across the globe really had no interest in accumulating gold until it was reclassified as a tier one asset. Now it's on par with US dollars and US treasuries. It's considered a riskless investment. In other words, you have the most sophisticated, well-funded, well-informed traders on the globe amassing massive quantities of gold. I think that has created, along with what's happened here with COVID, with the 40% drop in the Dow in March, with the lockdown and the economies grinding to a halt, people have awoken to the fact that precious metals are should be an integral part of any portfolio, and it is pushing the price up. I think the investment demand will certainly put an exclamation point on things, but I think the real impetus for rising prices is the most sophisticated players on the planet have decided it needs to be part of the portfolio, at least on a central bank basis.
So how did that work? So there's a committee in Basel, and they made these central bank policies, and how did the public pressure affect their decision to reclassify gold as a tier 3 to tier 1?
I don't think there was any public pressure at all. In fact, I think most of the public could care less about gold, and for a very long time wouldn't know a gold coin if it fell on their foot. I think what it is the realization that the dollar is screwed. A trillion seconds ago was 31,688 years ago. We have amassed $140 trillion by the government's own admission. Medicare, Medicaid, Social Security, government, military, pensions, all those things are off balance sheet. All of the entitlements and all of the on balance sheet and unfunded or off balance sheet obligations are putting us literally at $140 trillion in the hole. And all of that debt accumulated at the lowest interest rates in human history. So I think the realization that there has to be a second alternative, that the dollar's days are waning. In fact, I did a speech last July in Vancouver, and I showed a chart that was sent out by JP Morgan Private Wealth. And JP Morgan Private Wealth is the division of their bank that works with the centimillionaires and the billionaires, the wealthiest and most influential investors on the planet. The article or the letter that was sent to all of their depositors said something to the extent that we believe the dollar will be challenged for its singular world reserve status in the near future. We think you should mitigate your exposure to the dollar through other foreign currencies and through precious metals. So the bottom line is I think there is a lifespan on currency. In fact, Dr. Franz Pick said all paper currencies inherently are meant to die. They inherently all retrace to their intrinsic value, which is zero. And so the bottom line is that the dollar is getting close to its lifespan, and arguably maybe has already exceeded it when you take a look at the fact that it's insolvent. When you take a look at the prospects for the dollar, think of it this way. we have interest rates on the 10-year Treasury at 0.6%. And those treasuries are issued by an insolvent government that are running massive amounts of inflation. Since September of last year, central bank has accumulated or produced rather $7 trillion out of thin air. Now, it took this country over 300 years to create 800 billion in wealth, and they just with keystroke create 7 trillion, 3.5 since February, 1.5 trillion since May. And ask yourself this question when you talk about the prospects of the dollar: who in their right mind would buy a 10-year Treasury earning 0.6% when inflation is running much higher than that, issued by an insolvent government with a coupon literally of next to nothing? Nobody but the Fed. So the Fed has two choices. They can continue to monetize, which creates massive levels of inflation, which ultimately leads to higher interest rates and a depression, or they back away from the bond market and because no one else is buying it, and it collapses, interest rates explode, the greatest depression of all time. All roads lead to the same place: trouble for the dollar. And I think that the central banks realize that. They front ran this decision by over 1.5 years. If you look at 2018, the central banks as a group bought more gold in 2018 than they did as a community, as a group, for the previous 60 years combined. You took all of the central bank gold acquisitions for the 60 years before 2018, it didn't amount to what they bought in 18. Before the decision was made, now they knew what was coming. In 2019, that number increased by 90%. So you have the most sophisticated, in-the-know, well-funded investors front-running this massive decision. Now ask yourself this question. Central bankers don't make massive decisions like that in a vacuum. They don't do it just for shits and giggles. So the bottom line is that for 80 years nearly, the only tier one asset accepted by central banks were dollars and treasuries. Now, out of nowhere, they say, well, let's make gold a tier one asset. They front run the decision by over 1.5 years, continue to massively accumulate it, because I think the handwriting is on the wall. And that is that they plan on doing something with gold. Perhaps, if I had to guess, you'll see a new digital backed currency backed by gold to some degree. Probably not convertible, but if I had to guess, 10, 20, 30% will be the underpinning of a new digital dollar, because I think the days of the dollar are numbered, and the willingness for people to accept it as a medium of exchange or as a world reserve, I think, are coming to an end. And I think all of these decisions that they are making are for a purpose. Again, they don't make decisions like that out of the clear blue for no reason. So I think that really is maybe the most relevant, game-changing, important decision of my 30-year career. The second most being JP Morgan going long in the futures market after accumulating 1 billion ounces of silver, 10 times what the Hunt brothers wanted or to accumulate in 1980, and over 25 million ounces of gold. At the same time, they go long after 12 years of being short. They are under indictment, under 6 federal racketeering charges for their precious metals desk, being accused of being a criminal enterprise in an ongoing investigation into manipulation of the precious metals market. Things are starting to unravel. And if I had to guess, gold will be a center stage investment world over here very, very soon. People will wake up to the fact that stocks and bonds are not and mutual funds are not always the only pavement to the road to retirement. So I think things are changing very much. And the tier one revaluation by the Bank of International Settlements, the central bank, puts an exclamation point on that. I think it is something that everyone should really stand up and take note of. If I had to guess, very soon gold will be higher than most people think possible as a result.
Yeah, wow, a lot of good points there. Yeah. So you mentioned, I guess, a lot of central banks buying gold. Was that a lot of? Is that coming mostly from the U.S. or other countries?
No, all around the world. All the central banks are massive. I mean, the most of it is being accumulated by China and Russia and the BRICS nations: Brazil, Russia, India, China, South Africa. Um, the U.S. is not a big accumulator of gold. And in fact, there are those that would argue that they've been selling their gold and leasing it to suppress the price for a very, very long time. The bottom line is that I think all of that will change now that it has a tier 1 status, because the last thing the U.S. is going to want is being closed out of the gold game when everyone starts massively accumulating it world over. But, suffice it to say, the real drive for gold acquisition comes from the East. There's an old saying, he who has the gold makes the rules. And so I think it's somewhat disconcerting that we are being beat to the punch, if you will, on gold accumulation. And there are those that will tell you that China has maybe as much as 20,000 metric tons, 3 times what the U.S. proposes to have in Fort Knox, which, by the way, hasn't been audited since 1953. So, this is a game where it's a high stakes game. It's a long game, but I think that, history has a way of coming full circle. And I think the only way people will ever drink the Kool-Aid again, the currency Kool-Aid, is that it'll have to be tied to or tethered to some sort of an anchor, like gold. And if I had to guess, when Nancy Pelosi came out in March and said she wants a digital dollar, although it was voted down, Forbes magazine last week said we're getting closer to a digital currency. If I had to guess, you see a digital dollar, blockchain-based, so that you can validate the amount of gold that is supposedly tethered to the currency. That'll be blockchain-based, if I had to guess. A small percentage, 10, 20%, so that the governments cannot do what they have done to the U.S. dollar, and that is inflate it away to worthlessness. And that's happening right in front of our faces right now. So if I had to guess, that's what you see. And if I had to add an extra guess to that, it would be that the BRICS nations do the same thing. You've already heard about the digital yuan. The only way that these currencies will gain legitimacy in the international community is to have some sort of tether. And I do believe that tier 1 revaluation of gold is key to that idea. So I guess to me, this is a whole new ball game where the central banks are going to look to gold to gain legitimacy in whatever comes next. And something's coming next, that I can tell you. The days of the dollar being the singular world reserve currency are quickly coming to an end.
Yeah, it's hard to predict exactly how that would happen after what would happen after the dollar, I guess. Yeah, so you mentioned obviously the investigations into racketeering with JP Morgan and the gold and silver futures market. What has your research told you about that situation? What do you think is going on there?
Well, I think that it's pretty easy to say that for the past 12 years, they've been the largest short position on the COMEX market, while using that short position to massively accumulate what amounts to the largest physical position of gold and silver the world has ever seen. Interestingly enough, the COMEX is quickly turning into a delivery mechanism, and that's something it was never meant to be. And that is going to limit the ability of JP Morgan to continue, or any of the central banks to continue to manipulate the price, because in the case of JP Morgan, on the COMEX market, they had 160 million ounces of physical silver, so which was about 20% of the COMEX market. They were able to, the other side of that, if you have a physical position in stock, you can short on paper the other side and consider it a hedge, or call it a hedge, which is not really what they were doing, but it gave them the ability to claim that was what they're doing. What it really gave them the ability to do was pickpocket the market, to control it, to continue to short it and knock down the price. Bottom line is that last delivery month, there were 30 million ounces of their silver that stood for delivery. In other words, people who took the other side of that short contract stood for delivery, and that's very unusual. And that just cut off at the knees 20% of their stash. I think the days of them shorting the market are coming to an end. Not only are they long, but I think all of the banks who try to short are going to have to deal with the fact that people are going to stand for delivery. Normally, these
Yeah.
contracts just roll over. Now people are standing for delivery, calling them on the carpet. Very, very quickly, that'll change the landscape. The August delivery month, I think, will be something to behold in terms of what we see. And, in both gold and silver, I think the short game is coming to an end very, very quickly. That will set prices free. But when you take a look at what JP Morgan has done, yeah, they've killed every rally for the past 12 years. There is a interview that everyone should listen to. It's on YouTube. It's by my friend Chris Marcus. He interviewed Bart Chilton. He was one of the former CFTC governors, the head of the Commodity Futures Trading Commission, where a week before, or 2 weeks before he died, he gave an interview to Chris where he basically admitted that JP Morgan had indeed been suppressing the price, had been manipulating the price, and he wanted his superiors to throw the book at them, to prosecute them. He was told, no, it's a political decision, and to back down. And then he died 10 days later or 2 weeks later. But the bottom line is that what we've seen since 2008, when JP Morgan inherited Bear Stearns' short position, was 12 years of unmitigated manipulation. And so much so that, get this, in 12 years, thousands and thousands and thousands of short trades, every trade selling short, every trade selling short, every trade selling short, every single one, they never lost a penny, not one. It's all public information. That's a mathematic impossibility. And I know you're talking to me from New York City. Pick your favorite Yankee. Assume that baseball was going on since April. In a Major League Baseball season, a player, typically a starter, gets about 500, 600 at-bats. So that's your favorite baseball player for the Yankees getting 600 at-bats and never, ever, ever striking out. Never, ever, ever flying out, grounding out, sac fly, nothing. That's like going 600 for 600. It's impossible. Yet JP Morgan found a way to do it. So, I think this is a situation where when you look at the fact that they had carte blanche, never lost a penny, made all of that money on paper, the physical acquisition that they have done on the side is really what's telling. In other words, they've proven they can make so much money they don't need to physically store 1 billion ounces of silver and 25 million ounces of gold, the largest physical position the world's ever seen. I would argue that they held down the paper price to accumulate that position. And now they're getting called on the carpet by those trying to pickpocket their stash by shorting it, because no one ever did that. No one ever stood for delivery on those short contracts, and now it's becoming the rule, not the exception. I think things are rapidly changing, and I think those people who have been frustrated with gold's performance and silver's performance will wake up one day to find it has gotten away from them. And people like me, who have been like the little boy who cries wolf, at the end of the story, don't forget the wolf comes. And the CFTC doing nothing about it has been very frustrating. Maybe the Justice Department this time will. And the fact that 6 of their traders have already been indicted with racketeering charges, and the investigation is ongoing, is very encouraging. So I did hear just recently that they have been instructed to get in line with position limits. They have been far in excess of position limits for a very long time. And that was one of the things that Bart Chilton wanted to go after them for. Bottom line is JP Morgan is an extension of our government, of the Federal Reserve. They have been doing their tidings for a very long time. But this is a global market. The COMEX sets the price for the rest of the world. And I think the manipulation has too bright of a light shone upon it. And I think it's time for gold and silver to reflect their real value. The only way that you can successfully manipulate a market over an extended period of time is to push it in the direction it is going. The whole world is looking to gold and silver right now as an alternative to paper investments, to protect against the volatility and the uncertainty of what's happening. And I think that frightens the short players right now, who are caught in a jam. And I think it's going to be an interesting second half of the year. the confluence of events that brings us to ultimately to the election, to me, is a backdrop that should light a fuse under the price of metals. So right now, honestly, I feel we are in the eye of the hurricane. And I've been saying that a lot. After witnessing what we saw this spring and winter, high prices on metals, inability to source it, broken supply chains, and then leading into the social aspect of things here in Minneapolis, the global epicenter of insanity. I am very concerned about the trailing edge of the storm that's coming next. So I've instructed my operations department to go onto our line of credit and spend millions and millions and millions of dollars and buy everything that's not nailed down. Because I think that as September, October, November roll around, if the last few months are any indication of what's going to happen when this high stakes election comes to the forefront, along with kids going back to school and a second wave of the virus and all of these things that could really, really screw up the economy and, create more havoc socially. I think that people should really wake up and take a look at this time as a time to prepare and as a time to get their house in order, because I know that's what we're doing. And I feel that the trailing edge of the storm is going to pack as bigger of a punch as the front end did, which we had no idea was coming. And we should all think that it is coming on this side, and to bury our head in the sand and think that things are just going to be great second half of the year going into the highest stake election we've had in a very long time. I would say they maybe should reevaluate that thought process.
Yeah, definitely. Well said. Yeah, so you mentioned that the JP Morgan trading desk was inherited from Bear Stearns. They've been doing this for more than 10 years. What do you think is their agenda beyond just, like you said, acquiring more precious metals for themselves and keeping the prices down? What's their end game? Are they trying to corner the market? Are they trying to what do they do after they corner the market? They're just trying to buy more gold and silver for themselves. And who's behind?
Banks don't want to make a one big hit. Banks want to make money quarter after quarter after quarter, and that's what they've been doing. They're greedy. They're a profit center, and they want to make lots and lots of money, and that's what their agenda is. And they don't care if they violate antitrust law or break rules. They just get slapped with $1 billion fine here and a $700 million fine there, which amounts to a couple days worth of trading, and that's it. It's no big deal for them. They're a profit center, and I think their agenda is to make as much money as possible at the expense of everyone else around them. So it's very cutthroat. So I don't know. I think that they wouldn't go to the trouble of amassing the largest physical silver position the world has ever seen, amassing north of 25 million ounces of gold. They would not go to the trouble of holding it and storing it when they've proven they can make unlimited money on the paper market, if it not for to be a big part of what comes next. It's interesting that they did all this prior to the revaluation of gold as a tier one asset, almost like they knew something was coming. And they made all this money on the downside. They'll make just as much on the upside, maybe more. They'll let it run. When they let it run, look, with 1 billion ounces of silver plus every dollar it runs, they make $1 billion. So talk about ringing the cash. When you talk about silver at $19 an ounce, you're still roughly 2.5 times under its all-time high. And so there are very few investments on the planet that you can buy that are trading at 2.5 times under what it was priced at in 1980. And I think that this is, I would argue, the best investment opportunity on the planet right now, where it is low risk, high profit potential, tremendous privacy, liquidity, and flexibility. All of those things are found in silver. And when you look around you at the alternatives, you see a bond market that is a walking dead. You see a stock market that by every single metric as measured against the real economy, is as overvalued as it's ever been. We see Fed-induced asset price inflation, courtesy of the last 12 years of easy money since 2008 and low interest rates, that has created wicked bubbles and distortions in real estate, stocks, and bonds. And they are all positively correlated, because if interest rates rise, they all collapse. In fact, there's a group called Ibbotson, Ibbotson, that was bought by Morningstar. Morningstar is the large mutual fund and stock rating group. They just value and research mutual funds and stocks, give their opinion on it. They came out and said that there are no inversely correlated assets any longer to the United States stock market, with the exception of gold. In fact, all of the other things are positively correlated, and that used to be the opposite. It used to be stocks were risk on, you acquire them when you're working. As you get close to retirement, you sell them, go to risk off, which are bonds. And the bond market now is the mother of all bubbles. The Fed funds rate, which is the interest rate, the futures market and the Fed funds rate has us going negative into January. Now, I don't know if that'll happen, but the futures traders are saying, hey, we could go negative into next year, negative interest rates. But at 0.6%, as we were saying earlier, on the 10-year note with inflation running much higher, we're already negative. So the bond market is the mother of all bubbles. The stock market is as overvalued as ever been, as is the real estate market. And God forbid interest rates rise, all three collapse. The only inversely correlated asset on the planet any longer to the U.S. stock market, and arguably the U.S. dollar, would be precious metals. It's imperative that people have a position in their portfolio of gold and silver for that reason, and that reason alone, on top of the fact that the most sophisticated, well-funded, well-informed, influential traders on the globe, from JP Morgan to the central banks, have been wickedly accumulating it for a very long time, especially since 2018. And the revaluation of it as the only other tier one asset in the world, truthfully, is about as big of a deal as could be in the world of finance. And for people to miss this will be a once-in-a-generation opportunity to protect themselves and to profit, and to be in the front seat of a new system that's going to unfold. And I know it's going to have a underpinning to gold some way, somehow. And don't forget, there's a 90% correlation between gold and silver throughout all of history. So
yeah,
to me, gold is imperative. Silver is the finest investment your listeners could make, period. And maybe of a generation. And I truthfully mean that. The fact that I sell it, I'm objective. We've never had a customer complaint in 30 years, ever. My company has been around since 1989. We've done $6 billion in sales. Go on Google, you won't find a customer complaint. I don't speak about these things to try to drive business. I speak about them because I believe it. We're one of the largest precious metals companies in America. I don't need to try to convince people to buy something on a disingenuous basis. I will say to you, I truly believe that gold and silver right now are the investment opportunities of a generation. And so I think anyone who doesn't have a position in them is making a mistake, as the central banks and the commercial banks are showing it's really important to them, and they are the most influential traders on the globe.
Yeah, exactly. Yeah, so it seems like you think silver is probably the best investment right now, because it's so low in price. Am I correct?
Definitely.
Yeah. Yeah. So, okay. I guess just a little bit back to the whole futures market situation. I guess why do you think it's only JP Morgan? Why just kind of strange. There's all
So
these big banks.
there are 8 banks that are doing it. JP Morgan has controls over 20% of the market. JP Morgan is the biggest player on the block, but there are other central banks that are caught too right now, or excuse me, commercial banks that are caught short. So they're the ones that hold the largest position and were the biggest player. And the reason was that in 2008, when Bear Stearns failed, Jamie Dimon was brought into, and this is all part of the Chris Marcus interview with Bart Chilton, where he admits all of this publicly. Only time he ever did it, and then he died, ironically. But he said that when Bear Stearns failed, largely because silver went to $21 an ounce and they had a super large short position on it, it bankrupted them. They inherited that position under the promise that they would reduce their position limits, because with theirs, the combination of the two, they were substantially over position limits. And they didn't. In fact, they increased them. But the bottom line is that since 2008, JP Morgan not only inherited the largest short position ever on the COMEX, they continued to grow it and accumulate more physical. They were able to get away with it. So when they, in somewhere around 2010 or 2011, opened up a vault, which they had never had before, and filled it with 160 million ounces of silver, it gave them the ability to control the silver market by pushing it around. And because they could short their physical position, that was their cover. But what it enabled them to do is control the market, control the price, and to push it around, buy it back when it would go low, short it again when the open interest would grow high. It was just a game for them to make untold billions and billions and billions of dollars, to ring the cash register with complete immunity. So I think that there are other banks caught in this too. You look at Scotia Makata, they are getting out of the market right now for the first time. They're leaving the precious metals market, because I think that's like the rats fleeing the sinking ship. So I think this is all going to change, honestly. I think we are very close to seeing the COMEX be, at best, maybe a force majeure to a cash settlement with all of the contracts standing for delivery over the next 2 delivery months in gold and silver. I think it'll be very, very interesting to see what happens. I think you'll see a lot of metal come off the exchange in the August and September delivery months for gold and silver.
Yeah. Obviously, that would have a huge impact on the price as well, because futures markets have a huge impact on the price. You mentioned, I guess, that there would be blockchain solutions with the dollar and stuff like that. So do you see that coming out of the United States? Do you see that coming out of like the international, United Nations type of stuff, or do you see that coming towards like BRICS countries?
Well, China already has a digital yuan, and I think they will issue, the BRICS nations will issue something, but I think the U.S. will issue. I think we're very close to, they say COVID can live on paper currency. I really believe that they will issue a digital dollar. And the reason I think it'll be gold backed is that no one will ever drink that Kool-Aid again if it's not tethered. And so, yeah, I think you will see that very soon, sooner than people think. I think we're heading to a cashless society. And all you need to do is just Google digital dollar Forbes, and you'll see an article that came out last week or the week before that says we're getting very, very close to that, and it cites all sorts of driving forces behind it. And I think the world is moving in that direction. I think the blockchain will have to be used in order to create some sort of transparency, an open ledger, if you will, as to money creation. Any central bank that can create $7 trillion in a period of 10 months, that's just hyperinflationary. We are heading down a very slippery slope into what I believe will be hyperstagflation. I think that's where we're heading, which is much higher levels of inflation, of unemployment, and of prices characterized with little or no economic growth. It's the printing press meets the Great Depression, and it's the worst of all possible outcomes. It's something I'm not excited or looking forward to at all.
Yeah. Well, like you said, we're kind of right now in the eye of the hurricane, so people should prepare all they can for that. I think I'm out of questions. That was really informative.
It's good to be here. Let me know if I can come back somewhere down the road, and
definitely
happy to answer any questions that you have or any of your listeners. And If they're looking for the lowest price on precious metals in the United States, have them email me at Andy@MilesFranklin. Have them put your name in the subject line, and I'll make sure your listeners get the lowest price on any product in the United States, and that I can promise.
Great. Appreciate it, Andy. And
You're
we'll
very
definitely put the
welcome.
link as well. Thank you.